people, it's Rickita. I'm back with another video. So in this video, I want to tell you guys the 5 things that is stopping you from buying a home. So a lot of people, you're still in the market, you're trying to buy a home, and I've just been seeing these same 5 things happening. Like when I talk to people that say, "Hey, Rickita, help me buy a home," I see these same 5 things. So I want to make sure I go over it with you all. So all of these may not apply to you, but just listen and see if any of these are affecting you and stopping you, and fix it immediately. Okay, don't just say, "Oh, you know what, that is not it." It probably is it. And if you are having a hard time getting approved for a home, definitely call me. Let me see what we can do to try to see what we can do, like increase your credit score. And if I see anything that we can do to possibly increase your credit score, or anything we can do in terms of some of these other steps, because it's more than just credit, then I can definitely try to see everything I can do to help you. And if you need help finding a realtor in your area, I'm connected with a lot of realtors, so I can connect you with a realtor. And if you're here in Florida, I can help you actually purchase a home. And if you need to get pre-approved for a home, you need to get your actual pre-approval letter, definitely call me, because I can help you with a lender that can help you get pre-approved. Now, if this is your first time watching my videos, press the subscribe button and make sure you guys like this video. Let's get right on into it, because I want to go straight to the point. Okay, so the first thing, I have all the steps here. The first thing is, you guys just don't know the steps, and you guys think it's harder than what it is, like to buy a home. What you need to do is, you need to make sure that to buy a home, you need to make sure you have your last 2 years of your W-2s or your tax returns if you guys are self-employed, last 30 days of check stubs, last 60 days of bank statements. Make sure you guys have 2 years of stable income, hopefully at the same job. But if you guys switch jobs, just make sure it's like in the same field. Okay, you guys do need to have some type of money saved. You guys don't just think, "Oh, I'm doing like a no money down option," because even if you guys do like a USDA no money down option, they need to see that you have reserves, because they don't want you to buy a house and you don't have anything to fix it if something's wrong with it, or if anything was to happen, you just broke. They don't want you to be like that, so you need to have some type of money saved. Like, that's really the steps. And then make sure you have at least a 580 credit score. 580 if you do an FHA, or maybe VA for the people that's vets. You could do the VA, or in the military, but you can do the VA loan, and you have something called conventional, have at least a 620. USDA, I do want your credit score is higher, but you can do it like a 620, but try to see if you can get it to like a 660. Okay, and that's your middle score. So all your credit scores, all 3 of them lined up from least to greatest, whichever one is in the middle, that's the one that they're using. So those are the steps for you guys to purchase a home. And a lot of times people think that it's really more to it. Those are really the steps for you guys to purchase the homes. There's other little things you have to think about it, but we're kind of going to go over those now. Okay, now the second thing is, a lot of you guys have debt. Yes, you guys have collections, and you guys have charge-offs. Now the mortgage companies, they don't care about charge off if there's a zero balance. They care about those charge offs that have a balance. And a lot of times they're going to take 5% of that balance and add it to your debt to income ratio for your charge offs. And for collections, they don't want you to have more than $2,000 in collections. So you need to pay off those collections in terms of, well, first, let me not say that. You need to try to remove those collections from your credit reports. A lot of those are inaccurate. They're probably re-aging the debts. And you most likely need to try to remove those collection accounts from your credit reports. If it's an account that have all the correct verification, they can show how you actually owe it, then you need to try to do a pay for deletion and settle with those companies. Portfolio Recovery is a great company that we can think about with pay for deletion. If they have all the information to show that you actually owe that money on that account, then you need to try to see if you can pay it and get them to settle it out. Usually about 60% or 50% you'll have to pay. Once you do that, in 30 days, that account going to be deleted. It's going to most likely shoot your credit score up, and then you can go ahead and get your house. Do not let some of these debts stop you from getting a house. Okay, so that's the key thing. You got those collections, you have those charge-offs. So I need you guys to take care of that if that's something that you all have. Now, the next thing we're going to talk about is the high balance. You guys have high balances on your credit cards. You have your credit cards probably maxed out, or you're spending more than 30% or 29% on your credit cards, and it's making your credit score very, very low. And each credit card that you have, say if you have like a lot of credit cards, 4, 5, 6 credit cards that have a balance on it, I don't care what the balance is, they're going to have to take your monthly payment and use that for your debt to income ratio. So how much debt do you have to pay every month compared to how much income you have coming in? Now, if you guys have a high debt to income ratio, they're not going to approve you. Now, if you guys barely getting by with your debt to income, then what they're going to do is say that you can't afford the house that you want. Most likely they're going to approve you for a lower amount, and you're like, why did you only approve me for this? I'm paying more of this in rent. That's because of your debt to income ratio. So find out those credit cards that probably got $100 balance on it, $200, and pay them off. Make them have a zero balance so that they're not reporting into your debt to income ratio. And if you can, get your credit cards down to 5% or less. And those ones that had a little balance, pay those off completely. But the ones that probably got like a higher balance on it right now, you're like, Rickita, I can't pay that off all the way. Get those ones down as low as you can. But make sure when you look on Credit Karma, your utilization is at 5%. Okay. Look on Credit Karma and then try to get some of those credit cards to a zero balance. The next thing is, some of you guys have an unstable job or you have low income. If you guys have an unstable job in terms of, hey, I keep having to switch my job, they're not going to try to approve you for a home. They want to make sure that you're stable, especially for those people like, I'm trying to get a home. You know, my home is going to cost 400,000, 300,000, 200,000. You know, this is a lot of money that they're lending you. They want to make sure that you're going to pay it back every month. So make sure you guys keep stable income. If you have very, very low income, it's going to be hard for you guys to get approved for a home. You want to make sure that you do not have a lot of debts like car loans, credit cards, and loans that you have to pay on monthly, because you're really not going to be able to get approved for a home. Okay. So unstable job and low income is a big thing. Now, savings. This is a very, very important thing. I have a lot of people say, Rickita, I want to buy a home. And I say, well, how much you have saved up? I have nothing saved up right now. You need to save some money. Like, take the time to really save some money. I have a $5,000 saving challenge out there, and I tell people to try to save 5% of the home that they're trying to purchase. So if your home is $100,000, save $5,000. If it's $200,000, save $10,000. You're not going to probably need it. We don't know. We're going to only know when you purchase your home. Try to see if you can get some seller credits, closing cost credits. It can usually give you up to 6% of your home if you're doing FHA, but try to see if you can get some concessions. And if you can, that can be less money that you have to put down on your home, but you need to have some type of money saved, because with FHA, you got to put 3.5% down. With conventional, you probably got to put 5% down. Some people are already trying to put 20% down on their home. You have to have some type of money saved. So $5,000 if you're trying to buy a $100,000 home. Save $10,000 if your home is about $200,000. $15,000 if your home is $300,000. $20,000 if it's $400,000. $25,000 if it's $500,000. Just keep adding that $5,000 for every $100,000. I have a $5,000 savings challenge. That was a great way that I was able to save money, and that I'm teaching other people to save money. Every week they have a certain amount you have to put in your account. It's a digit account. Definitely check out my other videos on the $5,000 saving challenge. It's a digit account where you can put money into it. You can literally transfer it right out of your bank account. I do it on my phone, and you can set it up, and you can say, hey, this week I got to put to the side $195. Go ahead and do that transfer. This week I got to put to the side $25. That's it. Whatever amount you got to put to the side that week, just put that money to the side and don't think about it. Especially if you say you want to buy a house. And in a year, you're going to have all the money that you need to have to buy your home. Now, this is only for $100,000. So it's $5,000 for a $100,000 home. If you guys are trying to buy a $300,000 home, then you need to multiply whatever that number is by 3. If it's $500,000, multiply it by 5. And when you're keeping it in the savings account, you're tracking, you're showing them, where did you get this money for your down payment? Oh, I've been making transfers. They can see it. It's a paper trail. Some people are doing like the envelope thing where they're saving the money at home. That's not going to cut it, because they're going to wonder, where did you get all this money from? It's better to do a transfer into an account that they can see, and they can do a paper trail. They can see, oh, you've been saving this money for a year. I can clearly see when you took it out of this account and then you put it in this account. And that way, you know, your money is there for your down payment. So definitely check out the $5,000 savings challenge. Now, hopefully this is very helpful to you guys. It just was on my heart to make this video because I'm getting a lot of calls. A lot of people want me to help them buy a house. And I see that these are the biggest things that's stopping people. If you guys need me to help you buy a house, well, find a house. I guess I can help you buy it. But help you find a home, definitely call me 407-374-2747. That's my direct real estate line. It's probably going to come to me, or it's going to go to my assistant. My company is Rickita Realty. I have my own brokerage, so I'm definitely here to help you guys. I don't care what state you're in. I'm helping people all around the United States buy a home, and I'll be happy to help you guys. If you want me to look at your credit reports to try to see what you can do to get your credit score higher, or to help with your debt to income ratio, I will be happy to do that. It's no charge. I'll look at it and tell you what you need to do. Just call me, have your credit reports available. You can get it from Credit Karma, or you can do Identity IQ. And I like Identity IQ because we can see all 3 credit bureaus, okay? But go ahead and follow these steps. And if you have any questions, go ahead and put them down in the comments, and I'll see you guys in the next